Yo, what's up, guys? This is Juhyuk again. Today, I have a very special guest, Charles from Capriole. I look at his charts all the time on Twitter, and he has given me some solid life advice without him knowing it. And I wanted to introduce everyone to Charles and his insights because, yeah, I get so much help. And without further ado, Charles, would you like to introduce yourself?
Yeah, thank you, Jihok. It's great to be here, and it's very kind of you to say. So glad it can be some help. So I'm the founder of Capriole Investments. First and foremost, we run a quant um, macro absolute return hedge fund, and we specialize in Bitcoin trading, investing, obviously. So a lot of our time, a lot of what we're known for is building Bitcoin and on-chain related metrics and models to help navigate investing in the market, like macro index, energy value, production cost, hash ribbons, etc. And recently we did a big upgrade in our chart platform at Capriole, as you just noted on. So we showcase a lot of our metrics and strategies there, and some others that we find high value as well. A big focus that we do is basically trying to, break down the data and identify what's the most important driving factors of investing in Bitcoin and other macro assets, and how to manage opportunity and risk, and basically stripping out the noise and identifying the signals. So, if you're interested to learn more, you can obviously check out the charts on our website and explore it a bit more there. But yeah, that's basically what we do. We're obsessed with data and investing.
Yeah, so the big question, what's your outlook on Bitcoin in 2025?
So yeah, right now it's very bullish. If we had this interview a couple months ago, it wouldn't have been. But I change my views, day to day, week to week, based on the data and what our models are saying. But right now, it's really positive. I did another podcast about 3 weeks ago, I think, when we were at 90K, and I was also really bullish then. And a lot of those reasons are still similar. So the big factors back then were that we'd broken back above the 90K range, which demonstrated that the breakdown below to 80, 70K was a fake out. And typically, from a technical perspective, when you have that, it marks the start of a new trend, which is really bullish. That's just technicals. And then at the same time, we had the macro index from Capriole, which is our machine learning model that aggregates over 100 different data points from Fed data, liquidity data, macro data, equities, bonds, all the way through a suite of on-chain data together to come up with a position. That also was trending positively. And we also had just come out of a wave of significant strength for gold, and Bitcoin tends to lag gold. So there's a lot of cyclical factors and data factors lining up, which are really positive. And that combined with just basically capitulation across sentiment, all the sentiment metrics that matter in macro markets. And we got 4 of them on our website, the ones that I really like, and they were all in massive oversold territory, which only happens in really great opportunities historically. So COVID crash, etc. 2008, 2009. So all those things are kind of aligning, which made me very bullish. And that's still pretty much the case today. The difference is sentiment's neutralized or normalized mostly. And that's fine. Like, you tend to see that before there's any real risk from at least the sentiment perspective, you trend into greed for days or weeks, and we're nowhere near that. So that's good. Macronex still positive, and now we're obviously printing new all-time highs on Bitcoin on daily and weekly closes, which is really positive. So yeah, on net, I'm very bullish here as long as that data continues to be that way. There's a few things we could talk about which would change my opinion, but as long as we're stay above 104K, which is the weekly kind of technical level I'm looking at, as long as Macronex trends up, as long as US liquidity and money supply continues to go up, I think 150, 200K is definitely on the cards this year.
Is it okay to ask like a price prediction, let's say like at the end of 2025, or what do you think will be the top?
Yeah, I think it would be that. I think if the data stays in that current trend we're in, I think 150 to 200K is definitely possible this year. So a 50% plus rise would be possible. There's a few things that can derail that. I can just maybe pull up a couple charts. So this is our charting suite with some of the metrics we use. But if we just look at it from a simple technicals perspective on the weekly time frame and look at the recent range that we had. So this is the technical breakdown we had below 90K to 80. That was very bearish. But then once it was reclaimed, as soon as you get these breakout candles back into a range for Bitcoin, it's pretty consistently a really strong technical signal that starts a new trend. And that was what made me particularly excited in this zone, along with the other fundamental data we saw. Obviously, the first target would be the range high, which we hit. So opportunity isn't as great today, but as long as we're above 104K, I'm very bullish. So the first kind of line in the sand for me from technical perspective would be if we close below here, I would be, targeting probably 90K at the least, and then there'd be growing concern of downside from a technical perspective. Not my base case, but that's kind of the level to watch for 104K from technicals. As long as we're above it, very bullish. But then, we come to all the on-chain metrics, and that's where it kind of gets exciting. So MVR-VZ score is a classic valuation metric for Bitcoin. We're not even at the kind of mid-range point here of 3 standard deviations. You'd normally see each cycle, multiples higher. So that suggests, a doubling or tripling opportunity. Energy value is similar. You can look at it on different time frames, but that's the fair value of Bitcoin based on just the pure raw energy expenditure from mining activity. It's around 130K, and we're at 110. So I've been tweeting about this for a while, but whenever you're below it is usually a good opportunity because we tend to mean revert to it. So price tends to always, go above it, beyond it, wrap around it over time. This metric's unchanged for 6 years, so it's worked quite well. And when the cycle really gets going, a bit of FOMO, price would expand well above that. And even if you consider that we're now $1 trillion asset, if we didn't even get anywhere near that high, and maybe we just went up to, 40, 50% above it, we're still talking, or even 80%, we're still talking near a doubling in price from here. So there's a lot of metrics look quite good. I could spend a long time talking about them.
Yeah.
Hodler growth rate's one I like as well. This shows 3 lines here. This is just the supply last active over different periods. So 2+ years ago is the one that's most important to me because that really shows the long-term holding behavior. Long-term holders tend to sell down into cycles as they go on. But the good thing is that in this last dip, we saw a bit of a spike up in the 1 and 6 months, which they need to start trending up before the 2-year can. And that suggests there's more long-term acquisition happening in the last few months, or the trend may be changing. It's a bit early to say, but you want to see that kind of growth, ideally, into the early stages of a cycle. And you can see the 6 month has been a bit of a leading indicator recently as well for good price moves. So hopefully that will continue. But you could look across the board, but valuations are pretty fair. And then we have this, what for me is the most important metric is the macro index here, trending positively and in the green. As long as that's the case, very bullish, and it can get to, well above 2, or at least, 1.8 before you have any kind of growing risk of a trend exhaustion happening. So we're still quite early in that process from a fundamental perspective, which is great.
Yeah, I saw this chart like a few days ago before recording this, and I was like down like 50% on my fart coin perps position, long position. And I was like, yo, I'm not selling, I'm not capitulating on this one. And speaking of Farcoin, we gotta ask, like, what's your opinion on altcoins? There's so many thoughts on if it's happening or not. What is your opinion? What do you think? Do you think it's happening, or do you think like in a new way? Like, is it just us rotating and PvPing each other?
Yeah, look, I've got a few different views on it. I think things are structurally quite a bit different this cycle because the biggest driving forces this cycle, of course, are Bitcoin ETFs and just US policy driving the Bitcoin Treasury flywheel, also driven by Saylor, which has just had a really big centralizing focus in capital flows into Bitcoin. And we've always obviously had the view that Bitcoin's the strongest, most robust long-term asset, but there's great opportunities in altcoins. It's just the difference is now that the gap seems to be wider than in previous cycles. I think there was a bit more. It was a bit more equal when it was more retail playing field back then, as opposed to now. So that is a fact to consider. That the real money flows at the moment are Bitcoin. That probably will continue for a while. The other factor I think is we're now approaching 10 years of altcoin history, and there's been multiple cycles now where retail has just gotten destroyed. Where we've seen Bitcoin goes down 80% every 3-4 years, and altcoins 99% plus on average probably. So I think people have been wrecked a lot, and it's kind of that process of you get fool me once, shame on you, fool me twice, shame on me. So I think after a while, the flows and excitement and energy of capital flows in the altcoin space is not as aggressive these days as it was 4, 5, 6 years ago for that reason. So, and a lot of that, was things like, failed promises from ICOs and white papers to other bigger issues like fraud and scams and FTX fundamentally, which really hurt the space a bit. So I think we're really being carried a lot by the ETFs and the positive US policy on Bitcoin, which is great, and I hope that continues. But yeah, so fundamentally, that they're a bit of a headwind, I think, together on alts. That said, if they're going to do well, we're approaching the moment, I think, now where it's going to happen. So you'd want to see, for any really strong altcoin cycle, a really strong trend in Bitcoin first. And we're in that territory now where that might be about to happen. So above 110, trending into new all-time highs is a great start. I'd like to see Bitcoin go even further. So like I can pull up a quick chart, just one chart, which is our one altcoin chart we have. Speculation index and crypto breadth. And these are two similar metrics, which basically plotting the relative strength of altcoins. So you can read about it here. But this bottom blue line is the percent of altcoins above their 50-day moving average. So right now we're at about 80 or 70%, which means altcoins are doing really well in the last couple of months. The gray line's a 200-day moving average. And you want to see, for really broad strength in altcoins, you want to see that start to trend up. So we're still pretty low, right? Like 5% are showing any real long-term trend. But you see, like, for example, the last cycle when Bitcoin went from 10K to 60 in a few months in late 2020, you start off obviously with strong short-term trend, the blue line, and then you see the gray line trend up here. So that's something we'd want to watch, right? Like once this gray line starts to trend up above 20, 30%, that's then things probably start to get really exciting for altcoins. We're not quite there yet, but it could be happening if Bitcoin presents a lot of strength.
So we have some room to breathe, but we don't know when will ever come. Like, I'm imagining, like, after hearing what you said, maybe BTC dominance could go up to, like, I don't even know, like 80%, like
Yeah,
85,
yeah.
90. I think a lot of
It's
people.
possible, and that would actually probably be the best case scenario for an altcoin rally, because you want to see Bitcoin lead. So this blue line above here, the speculation index, that's the relative outperformance of Bitcoin in the last 90 days. So we're at 10%. So altcoins are not really outperforming Bitcoin. When you had this huge move to 60K, so Bitcoin strength, Bitcoin led that whole way. So alts didn't get above 20% till Bitcoin hit 43K, which was more than double the prior all-time high. So if you think about, that would be kind of today, Bitcoin going to like 140K. So like if Bitcoin hits 140K and altcoins are below 10, 20%, that would be really strong. Like it'd be people in alts would be like, oh, it's over. Give up on alts, put everything into Bitcoin. Bitcoin's at 140 and alts are just not outperforming on general. But then that would be the moment that alts would really start to rally because you've had huge capital flows into Bitcoin, and that would kind of trigger the capital flows downstream, which is what you want to see in any strong cycle. Is people make a lot of money in Bitcoin, they kind of move down the risk spectrum. Whereas if we find that in the next few weeks we're still at 110K, or we're at 120K and it's June, maybe it's even July, and alts just start rallying, I'd be really start getting really bearish, because the moment Bitcoin kind of ranges or chops and alts just go through the roof, it's usually the last puff of air in the at least in the near term for that part of the cycle. So you really do want to see strength in Bitcoin. So hopefully this kind of situation will remain, and we'll just see Bitcoin kind of grind upwards, and then you'll start getting that rotation into more speculative alt play opportunity.
That's cool. Sell in summer and go away if alts rally. That's a big lesson here.
Yeah.
Yeah,
If they
let's
rally too much.
yeah,
Yeah.
yeah.
It's all
Let's
relative.
switch
Yeah.
topics here then. So you mentioned briefly about, macro US policy, US China trade war, all that stuff. I guess people like me who are, mid-witted, they just get into these like macro themes like just too much, and picture these doom scenarios like about Bitcoin going to 65K, like, the world is ending and all that. But, I want to hear, that's why I want to hear why you think there are some things that people should ignore in your opinion,
Mm.
and some things that you deeply think that has relevance in the market. What are some signals that you ignore and you pay attention to?
Yeah, I think that's a really good point. It's so easy to fall in, and our brains are wired to focus on the negatives and outweigh negative outcomes twice as much as positive. So we just intrinsically look at bad news, and that's why bad news sells, and that's why all the news headlines usually bad news. So you got to try and filter out and ignore probably 95, 99% of the news, because it's noise, and just try and identify a few data points that over the long term driven fundamental value and an indication of trends. And the reality is that most things don't. And so with news and headlines in particular, I would say try and focus on what is pivotal news, like really game changing news. So things that will have fundamental change in business and outcomes across the world, or at least in the US, in the coming months, and that will just change data. And if you think about it that way, and what the impacts of any individual headline is, it's like 99% have no impact there. So some things that would count would be, these major tariff headlines when they first came out, start of April, and they were huge. That's one thing. When the Fed pivots, when they go from kiting to hiking and vice versa, the Treasury does QE, that would be a big thing. If unemployment just starts going through the roof. So, but those things, they happen maybe once or twice a year, if that, those kind of major events. So most things should just be ignored. And then if you go through that process, at least for me and the data we look at, tactically, I think things look quite positive on the macro side. Most of the metrics we look at I would say very, very positive. You've got global money supply printing new all-time highs. You've got US liquidity seems to be basing and starting to trend up. So that's really positive. One thing I'm kind of watching out for is I'll just show it very briefly. It's probably easier. Is just generally something relative PE. This kind of weights the earnings of equities versus the risk-free interest rate. So it's like a PE weighted by interest rates. So when interest rates are high, the relative value of risk assets goes down because you can earn the cash, the riskless rate of return instead. So when this ratio gets too high, risk starts to grow. And above one is a bit of a warning sign. Not too, we can stay above there for many years, but above 1.4, 1.5 is when things start to get quite concerning. So this in itself is not a signal, but it just says, okay, should start be a little bit considering of data related to overvaluation. And a lot of things come into play in that. Obviously, interest rates, just sky high asset prices, debt, etc. But the counteracting force is obviously liquidity, which is showing some strength here. And then more excitingly is the global money supply, which has gone through the roof. And finally, for me, at least for Bitcoin and crypto, the most exciting metric at the moment is this, which is the gold stock ratio. So why that's relevant? Well, this basically shows just the ratio of gold to equities, and then a 200-day moving average is the gray line. And when it breaks out, so when it goes red, that means gold and hard assets are outperforming. And it looks like nothing right now, but we've started to see that in the last few months. And that is really positive, obviously, for gold, but also for Bitcoin. And Bitcoin tends to lag gold by a few months. So that's really good news. But if you then zoom out in the scale of it, you see it kind of has these cycles every 30 to 50 years where it just goes through the roof, whether that be the 1930s or inflation, and that in the 1970s, or the early 2000s, it just had a strong rally. So the potential upside here is from 0.5 to 5. That's a 10x in gold. So you can imagine if gold was to, on a relative basis to equities, go up 10x, Bitcoin would just go bananas. So obviously that can change at any point, but as long as it's above the moving average, as long as it's red, that's incredibly bullish for gold and Bitcoin. So on the macro front, while that may not be good for equities, it does mean that the relative opportunity, at least in our space here in Bitcoin digital assets, is extremely high. Obviously, I'd like to see some strength in equities to kind of support that, but it doesn't have to be there necessarily if things go bad. But yeah, on the whole, macro looks very good tactically, but there are some valuation concerns, but they could last many years.
Yeah, Bitcoin definitely looks good here. As a fan of your charts, I'm feeling pretty safe in this spot. And it seems like, Trump has kind of toned down all of his trade war rhetoric. So, yeah, I'm just still holding. But besides Bitcoin, I want to ask what other assets you just casually trade, or do you have any like long-term holding alts?
Yeah, so a few things. Yeah, Bitcoin's definitely the bulk of we have a pretty large Bitcoin position, which is pretty consuming at the moment. So take all this with a grain of salt. But yeah, we have across the board sometimes some exposure to equities where it makes sense. So quantum assets, something I have a strong belief in. I think that's kind of like Bitcoin 2015. I think quantum will outperform Bitcoin over the next decade. Just because of where it is on the spectrum, the expected revenues is going to develop over the next 10, 20 years. It obviously high risk, high volatility, but for me, that's a strong play. Bitcoin treasury companies are a good way to gain, for me at least, short-term leverage in Bitcoin. I think they will become quite high risk later in the cycle, where there's potentially an unwind of leverage scenario, but I think we're quite away from that. And as long as Bitcoin trends up and has strength, Bitcoin treasury companies are a good way to also gain exposure to this asset class. In terms of alts, yes, we have a kind of systematic strategies that run portfolio positions in alts, but they're pretty dynamic. So they will go to cash quickly. They're pretty relatively diversified across 10, 20 different positions, for example. And we have some positions there at the moment. Sizing wise, pretty small still, but that could change over the coming weeks. Um, and then yeah, also some gold. Gold is actually, obviously you'd think Bitcoin's a better gold, and generally it is, but the way they move, they kind of move cyclically to each other, where one will outperform the other one form, and they can kind of hedge each other quite well in that regard. And just given this major formation across macro where gold could potentially outperform massively, I think that's a good play. Plus, we can take gold positions without impacting the sizing of our Bitcoin relative position. So it's kind of like an additional factor that we can add to the portfolio without any negative impact to Bitcoin. So that's something that I quite like as well. But yeah, they're the main kind of areas we're focused on at the moment.
When you said quantum, is that quantum computing?
Yeah, quantum computing stocks. Yeah,
Wow. I
yeah,
have no idea. What are some tickers?
yeah. So there's the four main US ones that I the four main US ones would be IonQ, IONQ, Rigetti, RGTI, D-Wave, QBTS, and QUBT quantum computing. IonQ and Rigetti are the bigger ones, and the other two are a bit smaller. But look, it's definitely high risk, but they've outperformed Bitcoin by multiples in the last 12 months. So that's really been a great alpha to our portfolio, and outperformed Bitcoin significantly. I think it's, like I said, super early days. That industry could have massive bear markets, like 80, 90% bear markets, much like Bitcoin did. Whereas Bitcoin's probably less likely to have those 80% drawdowns going forward. It might be only 40, 60%. But I think the compound annual growth rate of that asset class will be 50% higher than Bitcoin, probably. Yeah.
Well, that's what I'm looking for. So after this recording, I'm gonna go and look at some
Yeah, no,
quantum stocks.
obviously not financial advice, high risk, but do research.
Yeah, do your
Yeah,
research, everyone. We
yeah.
did not recommend buying any quantum stocks. Okay, so everyone's talking about cycles, macro, Bitcoin, altcoins. I think this conversation comes up very often because their bags are not pumping, and they're, as we have been talking about, it's very different because a lot of big institutions are coming in and buying Bitcoin. We have literal companies that are dedicated to buy Bitcoin. So
Mm.
we're just getting like Bitcoin to pump to infinity while everything else is dead. So I think that kind of portrays what's different about like the current cycle and last cycles. So if do you see any more differences in current and last cycles? What do you think they are? And do we even have cycles anymore?
Yeah, good question. In terms of historically, the cycles we had, like the 4-year halving cycle, massive returns, massive drawdowns. In that regard, I think the cycle is dead. Because that was primarily driven by the halving cycle and the earnings of miners and the supply they got relative to the entire network. And then they would dump coins when they became unprofitable. That's kind of like the basis of the hash ribbon indicator that we created. The thing is that now their relative impact on supply is, a couple of percentage points, if that. The bigger drivers of supply, the ETFs, Michael Saylor's, the treasury companies, etc., potentially the US government and more in the near future. So the miners relatively a small portion. So it doesn't mean the cycle itself is gone completely. It's just as a relative portion, it's less. So while it may have had a 60, 70% impact on price back then, it might be 10, 20% going forward. So that's why I think a max drawdown scenario next few years of 40 to 60% is probably what I would expect, pending any major, for example, if Michael Saylor had a
He gets
basically
liquidated.
liquidate, if he liquidates himself because he just takes too much risk and he just wants to keep buying too much, which is a possibility if he goes out of control, or if all the others trying to copy him and keep up just take too much leverage and debt, and again, well away from that. It's just a future risk scenario given the amount of FOMO in that space. Then that could be a scenario that takes things down lower in an unwind, but not on my kind of base case scenario. If anything, that I think in the near term will be quite positive for Bitcoin. So yeah, that case, the scenario, the cycle, you could say is dead, or at least the impact is much smaller. And like even Tesla went down like 50% in the last few months. So like the volatility we're seeing in mega cap US stocks is basically comparable, if not more than and then Bitcoin these days. So we are a
I get.
multi-trillion-dollar asset. Like it is we are a macro asset class now. That's the biggest difference. Is that before all these flows were driven by retail who quickly buy and dump as needed, whereas now it's on balance sheets, it's held for years. It's driven by what interest rates, risk, the VIX index, the dollar index, all these kind of different things are driving capital flows because all these macro assets trade relative to each other. So they're the biggest driving factors, which means I think basically Bitcoin will move slower because it's such a big asset, so that you can have less relative annual returns, you can have less drawdowns. I think it'll still perform really well over the next 5-10 years, but not the same as it did obviously in the last 10 years. And then in terms
Yeah.
of alts, yeah, basically what I said before. I think the market is relatively a bit scared, bit less open to taking risk compared to prior cycles. That'll change quickly if Bitcoin goes to 200K this year. Risk will pile in, I think, and we'll have a good little bubble probably in altcoins. But people are realizing that a lot of the promises, I think, of prior cycles, the products, supply chain on chain, metaverse, all that kind of thing. A lot of these things just didn't really eventuate, and some will over time. And there are still some really cool use cases, but the vast majority of them did not eventuate. So I think that is a bit of a dampener, but you get a good price run on Bitcoin, you're going to get a great run and outperformance probably on alts in that period too.
Yeah. I think that one thing you said, that altcoins are mostly useless. I think that's the one way to say it, and I agree. And I think that type of nihilism has it sparked the meme coin run during 2024. And I don't know, man. It's hard to say that people totally lost faith. I think a lot of people, like, that app just came out, Believe. They're trying to create like inner capital markets, what's so not on chain. So we'll have to see how people are seeing what altcoins really are. And that's why I think a lot of people are resorting back to fundamental driven altcoins, which I will not mention the ticker. I think a lot of people already know at this point. It's the only coin that was rallying for the last few days. So yeah, I think if we summarize everything we said today, look for Bitcoin dominance going really high, higher than usual. And then if these Bitcoin treasury companies starting to do crazy things, just think that is the top. I think that's it.
Yeah, maybe. Yeah. I think this could be a lot more drawn out in terms of time wise than people think. Like it could just move slower and grind up for a long time. And Bitcoin dominance, yeah, it could go up a lot, but it could also stay relatively flat where it is potentially. The most important thing is that Bitcoin keeps trending up for me. We don't want to see Bitcoin cap out at 110 or 120 here. I think that would be a big concern. But as long as it keeps that trend it's got going now continuing, as long as the fundamentals look strong, the liquidity and money flows are strong, a lot of the metrics we talked about and more, I'm super bullish here. And if that trend does continue, then you're going to see a ton of opportunity to also open up in the altcoin space too. And that's probably when they'll start to outperform, if and when Bitcoin can trending up.
Yeah. So one last thing. If you have anything to say to the people in Korea, I think you can leave a quick comment here and we can end the recording.
Yeah, look, I know we've had a lot of Korean visitors to our website and charts in the past and some of our data. So I don't have a lot of exposure to that space, but yeah, we'd welcome you to kind of get involved. And if anyone's got any questions, of course, feel free to connect on Twitter or on the website. There's a feedback form in the charts. So if you've got questions or want to have a chat and learn a bit more, then get in touch and we'll do our best to help.
All right. Thanks, Charles. It was great talking to you. I think this recording will be out very soon, and maybe I'll see you later when I visit Australia one day.
Yeah, sounds great. I love that.
All
Great
right.
to chat
Thank
today.
you.
Thanks, mate. Bye.